Hey everyone, Mike Meebeck with KTVU Fox 2 in the Bay Area. We all saw the numbers late last week. 20 million jobs lost, just like that in the month of April. Unemployment rate 14.7%, although it's probably higher. To talk about the money, to talk about the lack of money out there, we're joined by Winnie Sun, Managing Director of Sun Group Wealth Partners. Thanks again, Winnie, for taking the time.
Absolutely, Mike.
So with those big numbers, I mean, last week, and people, let's say someone has maybe five, $10,000 in savings. They lost their job. Let's say they also have a 401k. Let's say they also have a house that has some equity in it. If they were looking to pull money and they needed cash right away, in what order do you go? Do you go to the savings account? Do you go to your 401k and take a loan, or even dip into a house possibly?
Absolutely, Mike. I think the key thing is to focus on the monies that you can get to with the least amount of pain or penalties or fees, right? So the easiest place to grab from obviously is your checking account or your savings account. That would be the beginning stage. Then if you have a brokerage account, which is, an account that's not an IRA or a 401k, that would be the second area. The third area would be if you have a home equity line of credit set up on your house, that could be an option, or better yet, maybe seek out your friends or family and see if anybody can borrow you or let you borrow a personal loan right now. And it's not actually a bad idea to also reach out to your bank or credit union. They might be able to extend you a personal loan as well. The home equity line of credit, right now rates are almost such a low point that if you needed to borrow against a house, that would be something you could do temporarily too. The
Right.
IRA, of course, the CARES Act has given you that ability to borrow up to 100,000 of your IRA or your 401k for yourself. But again, that should be a last resort because in most cases, people aren't able to pay back those loans and then taxes and penalties could occur in the future.
So you could still get. I was going to ask you if you could still get penalized here financially if you do pull out early.
If you do take, so your 401k and IRA, you can pull out up to 100,000 and borrow that against yourself for 3 years. But if you take that distribution out, then at that point, your mutual funds, your stocks, your funds would have been sold. Okay, so if you pay that back within 3 years, no problem. But if you don't pay it back within 3 years, that does count towards your distribution. So if you're under the age of 59 and a half, then the penalties and taxes could occur in the future.
Okay. What about the impact of taking unemployment? Obviously, we know the pro because people need money; they're out of a job. But are there any negatives down the road? Maybe you don't feel it now, but for taking unemployment?
Yes, absolutely. So if you take unemployment, obviously it's your right, and you've been paying so into, the system for all these years. So if you take out unemployment, just recognize that there's something you're going to pay attention to, and that's having to pay income taxes. So that's something you'll have to make sure that you have allocated. So instead of, let's say you get $3,000, make sure you save a little bit of something there for taxes because that will be due at some point.
But not the stimulus checks, right?
The stimulus checks, that the good news is that you will not have to pay taxes on that, so that will come to you. And hopefully there's been a lot of talk that they'll be increasing or bringing on additional stimulus funds to each taxpayer that fits that below threshold, so hopefully that'll take place soon.
Part of your job. I mean, you prepare people for the future to make money, to save money. If I'm sitting at home and I'm working, um, but there's a rumor going around that maybe my company is going to lay off 20-25% of the staff or employees. And how do I prepare for that? What do you tell clients who are facing the possibility of being laid off and they're going to be out of work for maybe 6 months, if not longer than that, to get in order? If you have one, two, three steps for those individuals.
Absolutely. So this actually happened to one of my clients recently.
Okay.
He was hearing rumors and he knew in his industry and other companies they were letting go people. So he just wanted to prepare. So one of the things that you can do first and foremost is obviously to decrease your 401k contributions if you have them normally coming out of your paycheck, because that means that your take home pay is higher. Also, you can actually adjust your tax withholding on your check. So again, so adjust it so you can take out and keep more of your check. Also, the other thing you can do is every check that comes in, obviously make sure it's in something liquid. So your checking or your savings account so that you can access those funds really quickly. Plus, and this is a big one, if you're currently employed and you have a paycheck coming out and you have equity in your home, you should try and hustle and get a home equity line of credit set up on your house. And that's because you can only get a home equity line of credit if you're currently employed. So this enables you to have that sort of financial lifeline just in case you need to go in and pull some equity and use that money for your, your daily living expenses. In addition, you want to look and see and talk to your employer now and get a sense of what that means for you in terms of healthcare costs you. Because some companies, what they'll do is if you stop working or you've been laid off, then you actually can take advantage of COBRA, or maybe they can keep you on your and their health insurance long term. So a lot of conversations that you can have, the earlier the better with your present employer.
Yeah. You talk about that home equity line of credit, but you haven't heard any chatter about banks freezing those assets if you were to take one, right?
Well, so far, we've seen two of the large banks actually stop taking new applications, but so far we haven't heard of anybody freezing the line. So that's good news. That doesn't mean it won't change, and that could possibly change if we are in lockdown longer periods of time, or the banks are under even more pressure. So far, I think the Fed relief has alleviated a lot of that concern, but I think that's something you want to pay attention to. So if you are concerned and you just want to give yourself some breathing room, maybe consider taking some of your line out, putting it in the bank account for yourself. And then if you don't need it, you can always pay yourself back, but pay attention to your interest rate right now too.
I think soon after I got married and before I started having children, I mean, I signed up for life insurance. So I've had that for a while. But is life insurance come up in your with your clients? If people don't have it already, are they asking, hey, should I get life insurance, or is it better not to hold on to that money and not pay for life insurance right now?
Well, Mike, good thing you got your life insurance earlier. So usually what happens is life insurance can start to get more expensive as we get older. So when you're younger, getting it makes a lot of sense. Now, but then in some ways it could actually improve. For example, as people live longer and, we're taking our vitamins and longevity rates increase, then typically that could also make it so that, let's say we waited a couple years, maybe the rates will still stay pretty close to where they were a couple years ago. Now, the bad news is right now, unfortunately, with the situation with the coronavirus, a lot of our insurance rates, life insurance, long-term care, has actually gotten more expensive. So if you're in a situation where you really feel like you need it, then definitely reach out to your life insurance agent. We've been fielding a lot of calls because we can actually help our clients with life insurance and long-term care too. But, it depends on the situation. I will say, though, there's definitely been an uptick in something that you can do, and that is to get your estate planning in order, your will, your trust. Because I was just talking to an attorney recently, super busy these days, and I think it's actually a good idea. If you don't have one right now, set up a Zoom call and get it done.
That's a good idea. I am lacking in that area, and I've been told that I need to get on that. So if you're telling me, Winnie, as well, then that is something that my wife and I need to do. Let me kind of just pivot here to small businesses. If a small business were to receive some of that federal stimulus money in a loan, is there any chance or possibility that those loans could be forgiven down the road?
Yeah, so that is one of the big pluses of the PPP loan, is that as long as you continue to pay your workforce or your employees and maintain the majority of your employees being paid, then up to 75% of that loan could be forgiven, and the remainder of it, the rate of interest is like 1%. It's like so low, so it makes a lot of sense. But what you want to do, for those of you who receive these proceeds, is being really mindful of how you handle these assets. So what you want to do is ideally open a second account, a second business account that mirrors your first business account in the same, tax number. Everything should be the same, but move your PPP funds to that account so it's easy for record keeping, and make sure that you continue to pay your employees at payroll over the next 8 weeks. This is really critical, and I would absolutely have a discussion with your accountant to make sure those funds are getting paid to your employees. And take into consideration, it's not like you have to keep this exact same employees or the exact same hours, but you need to make sure that you're paying this to your employees in a similar rate than what you were a few months ago.
Yeah.
So if you have one employee just working so many more hours, then that's okay. If you have one of your employees working less hours or whatnot. So keep that in consideration and make sure to have a real fluid conversation with your accountant on that.
Yeah, good point right there. Also, when it comes to small businesses, structural investments, I mean, what should they be doing? Because a lot of states are starting to let the economies reopen and businesses are getting back to normal. But what should they be doing to prepare to reopen, you think?
So that's a great question. I think right now, like we're a small business, many of our clients are small business. I think we really have to be mindful of not only just saying we're going to get back to work, what supplies do we need, but think about infrastructure. Think about like, those you see them at the supermarket, those acrylic boards, right, that
Right.
prevent people from like coughing on each other. Those are type of things that you should be looking at and researching for your own business, taking a look at Zoom and different technologies that could, if you have to get shut down again right before the fall, what would that look like? So this time, prepare and assess, and most importantly, if you're still at home, start to research and see what things you can sort of decrease at your workplace in case this happens again. Like for example, like I know for one thing we would definitely do at our company is look at a way to cancel our corporate Wi-Fi if we need it too quickly, because we keep paying it and we're not there.
Yeah, good point. Yeah, I know. I think I'm at least another month out of our newsroom. And one thing we have in our newsroom are cubicles. I mean, we're on top of each other. So I know
Mm-hmm.
that plan is in the works too. I have no idea what it's going to look like whenever we go back. But I bet cubicles and being on top of each other, those days may be over. Um, let's say my children are young, so I'm not. Well, I am dealing with this in regards to saving for school and college. But someone who may have a teenager, freshman, sophomore year, they've been putting into a 529. Should they continue to put that money into the 529? Because I mean, personally, I would say yes if you can do it, if you're in the position to do it. But who knows, Winnie, what universities will look like in the future? Maybe the student doesn't have, or their plans change, or maybe tuition will get cut. I mean, I don't know what college is going to look like, but
Yeah.
simplify the
Yeah.
question: do you continue to dump money into that 529? I guess.
So great question. I mean, I have one of my team members today is actually taking his final, and he's doing so at home. So who knows what's going to happen at colleges by the time your kids and my kids reach college? But I will say why a 529 makes a good sense, and I continue to contribute to my three young kids is 529 for a number of reasons. Number one, like you said, if you can, this is a great time because there are obviously opportunities in the market, so you're buying much less expensively into their 529 today than we did 3 4 months ago. In addition, something that a lot of people don't know about 529s is that once you make that contribution into the child's plan, the student's plan, at that point, that money leaves your estate. So for you and I who are in California, estate taxes can be nearly 50%, if not more. So once we move the money into their 529, that now goes tax deferred. If they use it for college, in most cases, that's going to be federal tax free. However, if they don't use it for college, let's say, your son and my son become Lego masters and,
Sure.
they become superstars. Well, if that happens, then that money now has left your estate. So it's not subject to estate taxes now. In addition, if they use it for something not for education, the worst case scenario is they're paying a 10% penalty on top of taxes. And that does seem high, but by the time of all that tax deferred growth when they're young, is still a considerable smart financial planning decision for our next generation.
That's a good point. Yeah, trying to avoid as many taxes as possible. If it's out of your estate, then I didn't know that. I didn't know that could happen. Um, I looked at flights the other day because we were planning to go to Colorado for the 4th of July for about 8 days. And I think for the family of four from California, it was like less than $500 for a round trip. I think that was on Southwest. Not that I'm pimping Southwest, but flights are cheap. That's the point. So I know we talked about this probably a few weeks ago, but what do you think in regards to travel? International travel, domestic travel, better just to stay put?
Well, so that's a really great question. And I've been talking to a lot of travel experts because I'm a big traveler myself. And so the sort of the consensus is, at least in the short term, travel domestically or with your family is going to probably look like more of a long road trip or road trips locally, and figure out ways that you can sort of reduce your risk. So getting on a plane, although flights are really reasonable, there's still a lot of concerns, right? Especially like I'm thinking like there's going to be more precautions just going into the airport. People potentially taking your temperature. We know that some countries are now already requiring not only getting your temperature taken, but actually a blood test as well. So I would definitely hold off booking international travel at this juncture, but also domestic travel. You got to think about like Hawaii is obviously part of the United States. Right now, if you were to fly to Hawaii, you would be asked to be in a 14-day quarantine. So whether or not that sounds like an ideal beach vacation is
Oh,
really,
2 weeks.
a personal decision, but some things to think about for sure.
Yeah. One more for the road here before we let you go. I think it was last week when California Senator Kamala Harris and a couple other senators proposed giving every American a $2,000 check basically every month if you make, up to $120,000 a year. And I think it doubles for families. But is that something you think has legs there? And if that ever does come to fruition, to these Americans, just like the stimulus checks, I guess if you have to spend it, you spend it. If you can put a little bit away, put a little bit away.
Well, Mike, I'm hoping it takes place. I'm actually hoping for more. And the reason it is because obviously the $1,200 was not enough. And I think any reasonable person would know that that's not enough. We see in Canada, they've already been paying weekly checks to their citizens. So I think the US has to come up with something. $2,000 sounds like a great start to me. I'm hoping we hear that sooner than later because I think you're going to pay it out either way. You're either going to pay it out in unemployment, which is stressful and increases risk, or you're going to pay it to the taxpayers in a fluid way so they can use the money very quickly. And I mean, just how we saw with the PPP loan, you got to make the process a lot simpler and get it to people with needs. Otherwise, there's going to be growing hostility and anger, and we're not going to be able to get through this together.
Yeah, great point right there. Winnie Sun, Managing Director of Sun Group Wealth Partners. Thanks again for this Monday conversation. Have a great week.
Thank you so much, my friend, and talk to you soon.